I believe that's going to be very popular, and they're very, very profitable. What is the future of the real estate market? So the future of the real estate market is really going to be affected right now by the coronavirus. The coronavirus is going to affect the future of the real estate market. The projection that I had of where the market was going to go, the coronavirus kind of pushed it to go in that direction faster. So this is where I see the future of the real estate market, specifically like housing. Okay, we were naturally progressing to working at home, and being close to the company headquarters isn't as important. So people were going to move away from the major cities like LA, San Francisco, Toronto, New York, Miami. They're going to be able to move away from those centers and move towards more secondary and tertiary markets. What that means is now, since they don't need to live that close to the headquarters, they can live towards the suburbs. Right now, it's going to matter really about the work that they're doing from home. It won't matter how close they are to the office. I still believe there's going to be like more micro hubs spread throughout the country. So you're going to be in a secondary and tertiary market. They're going to have a smaller hub, smaller teams, more compact. They're not going to have one major office with everybody in it. Now, I do believe that when we're moving away from these major city centers and we're working from home, people are going to be spending most of their time at home. They're going to be working from home. They're going to be studying from home. A lot of this stuff is going to be done home. At the end of the day, people are really going to want to spend their time around other people as well. So they're going to move away from the large cities, but what's going to end up happening is they're going to move towards closer to a more of a downtown market. So they're going to live in, for example, like small cities, people are going to more move towards the downtown market. So when people leave their house, they can walk downtown, go to the bars, have drinks, eat dinner, eat lunch, and then go back to their house and go do more work. So even though you're going to be moving away from the large cities and investing in these smaller cities, the best return on your investment is to invest in the downtown market. So, for example, I've been buying in downtown markets now for the past 15 years, in these smaller cities, but close to the downtown area in these small cities. I saw that these cities are really pretty. They had great restaurants, great bars. They were right by the water. So it's a great place people will go and relax on the weekends. And now those homes are basically have gone up about 5 times in their pricing. I mean, you used to be able to get a home in that area for like $150,000. Now they're going from $500 to $1 million. And this is only in the last 15 years. I believe more and more people are going to move away from the big cities into these small downtown areas. And again, work from home. And then when they're done working for the day, they're going to want to go downtown, eat their food, and enjoy their lifestyle. So that's going to be one major move that's going to happen in real estate. The next major move that's going to happen in real estate is that we're going to have apartment complexes that are going to have, instead of like a basketball court or a racquetball court, tennis court, they're going to have small office centers in the front. So when you rent your apartment, you're renting a 2-bedroom, 3-bedroom for an extra $100, $200 a month. They're going to provide you an office inside of the front of the complex. So you go into that office, you get about 100 square feet. It's about the size of a bedroom. You're gonna have your desk in there. You're gonna have all the internet access, electric, everything you need. And you just put in your own desk. You put in your own equipment, and you can just go there to work. So you're not at home and working. You know, you're going to be able to leave your house and go to the front of your apartment complex and then go there and do work. That is my opinion of what's going to happen in the future. Boise Realty says larger homes needed with office space, micro shopping hubs mixed with food, shopping, and entertainment. I agree. And I also believe that the mixed use is going to be coming back in style. If anyone doesn't know what mixed use is, imagine like those old office or the old style of properties where it's like, you got a little shop here, and you got your little shop here with like a deli or whatever, and then you got 2 levels of like apartments above. I believe that's going to be very popular, and they're very, very profitable. So, very profitable, and it's going to be coming back in style because I think a lot of people are going to want to, again, live very close to where everything's happening. Because if you imagine, everyone is at home now based because of the coronavirus. They're really getting antsy to get out there and live lives and to be able to socialize with others. So I believe that's going to be happening. I believe everything is going to start getting micro-sized. Everything's going to get shrunken, and people are going to be able to kind of be able to live life in a more tight community now. So, all right, Lucy on YouTube says, "Hi, Pascal. Do you think people are going to be renting bigger homes or bigger apartments, 2 and 3 bed plans?" I believe yes and no. I believe people are going to move out of, say, LA and move into a city an hour or two away from Los Angeles and then rent a 3-bedroom house instead of a 1-bedroom. So I believe that is what's going to happen. Not specifically is someone going to move out of a 1-bedroom in LA into a 3-bedroom in LA. That I don't think is going to happen. I do believe those markets are still going to be expensive because people want to live in those areas and they still think that's cool. So there's going to be a demand for that. But I do believe that what's going to happen is a lot of growth and a lot of spreading is going to happen outside of those major hubs. So that is my prediction for the future of real estate. I'm going to go into the Q&A and answer some questions here. Brad says, "I'm 26-year-old with 400K liquid cash to put to work. What would you do?" 400K liquid. So the issue with when you're having this much money, it doesn't sound like you probably don't have the experience to be a real estate investor. So you cannot qualify for, if I had 400K with my experience today, I'd buy a $2 million property, put down $400,000, do some value add to it, increase a bunch of equity in the property, increase the rents, make a lot of money, do a refinance, pull my cash out and buy another property. You're not able to get those loans because you don't have seasoning. Basically, you don't have a resume to show the bank to say, "Hey, look, I've done this before. Let me borrow this money." Because just because you have $400,000 to put down doesn't mean they're going to give it to you. So doesn't mean you can be able to do these deals. So either what you can do is you can actually team up with somebody where they have the experience and the resume to do deals, and that way you guys can partner together. You don't need a resume. You just need credit with income. Maggie, that's not, when you're doing loans of over $1 million, you do have to have a resume to get the commercial loans. So I know you need credit and income. Credit and income qualifies for when you're going 4 units or less. When you're over 4 units, you don't even need good credit. Yes, you need clear underwriting, but the bank is not going to give you a loan if you don't have experience in rental properties. Like, you have to have a history showing that you've done these deals before. So when I say commercial, I'm talking about anything over 4 units. So a 20-unit apartment building, that's considered commercial. That's commercial underwriting. Now, who would give you a loan for that? Fannie Mae and Freddie Mac would give you a loan for that. Now, you'd only need 20% down for that loan. They'll give you a 30-year amortized loan, a 3.5% interest or better. 203K, you're talking about 203. The guy has $400,000. Why would he do a 203K loan? He wouldn't do a 203K loan. He has money. 203K loan is for people that need a 203K loan is when you need the bank to help you do a remodel on a 1 to 4 unit family home. So you don't have the money to do the remodel. So you're going to put a low down payment and they're going to help you with a remodel. Why would he start with a 203K, Maggie? Why would he start with a 203K loan if he has $400,000? That's like a waste of his time. If you have $400,000, you need to you need to use your capital and get it working for you. So in this situation, what I would do, I'm trying to say, if you have $400,000, you need to get that capital working. So normally we're getting our people that are investing with us and they're putting up $400,000, they're getting about 15% IRR, internal rate of return. So that means you're going to average annually around $60,000 return on that 400K. Now, if you're taking your money and you're doing that, that's going to be a good return on your money, other than letting it sit in the bank.